Hey YouTube, what's happening? It's Richard, founder of Short Term Rental University and professional real estate developer. And today's video is a question that I just experienced with Mr. Bossy, Erica's dad, as he's setting up his listing in California. And the question is how to collect local taxes and what to do when Airbnb collects them, say, and HomeAway doesn't, or vice versa. But before we get into it, if you need tax advice, we've actually had a guest, Clint Coons, on our show before, and he's a great resource. So if you're interested in learning more about his tax solutions and or asset protection, we'll include a link in the description below so that you can contact him for your own evaluation. But now, back to the video. So here's the backstory. As the regulatory environment changes and becomes stricter, what I've also taught is that localities will start to tax the Airbnb hosts and include a lodging tax or whatever they call it. They all call it different things. But in essence, they're basically collecting a similar tax as they do from hotels and bed and breakfast in the community. One, to level the playing field, so that's fair. But two, to improve the community, to reinvest and improve roads and lighting and parks and all of that stuff. Schools, really important stuff. So I think it's a really good thing. But now recognize this. That's a huge challenge for both Airbnb and HomeAway to understand what happens in every single state, in every single county, in every single city, town. All of those things are very unique and one-off, and both Airbnb and HomeAway are two totally different companies that could go about it entirely differently, in a different order, in a different speed. And so what I have found time and time again is that one, I love investing in areas where the taxes are collected because it just makes my life easier and I know I'm law-abiding, and it just is all happens naturally behind the scenes. So that's a great thing. If you live in a community where both Airbnb and HomeAway collect the taxes for you, the local taxes, that's wonderful. You've got nothing to worry about. Just keep doing what you're doing. But if you're like me, in many of my areas where I have Airbnbs, I find that only one of the two will actually collect the taxes. So let's just use the following example. Let's just assume that Airbnb collects taxes and HomeAway does not. Now, if I put my price per night on both platforms using dynamic pricing, and I recommend beyond pricing, at $100, when somebody goes to check out of Airbnb that collects taxes, they'll see that per night rate is $100, and then at checkout, they'll find a 10% tax plus all the other fees, and that'll get paid, and I, the host, get the full $100 because that was my advertised rate, and Airbnb added the tax on top of it, right? So we're clear, I get $100 in my pocket. On HomeAway, though, in this particular instance, they are not collecting the tax. So if I advertise the same room using the same dynamic pricing for $100 a night, when somebody goes and checks out, they will pay the $100 plus whatever additional fees, and I'll get some number less than $100. But most importantly, I also now need to collect and pay 10%. I owe $10 more. So not only did I not get the first $100, but now I got even $10 less, and so on average I'm somewhere in the $85 or $90 range. So just to be really clear, in the instance where Airbnb collects the taxes, the price per night is $100. At checkout, Airbnb adds the taxes, collects them, and then pays them for you, and I, as the owner, the host, I collect the $100 net to me. $100 comes in my bank. Let's forget about all the fees for now. We're just trying to keep the math simple. In the HomeAway instance, and again in this example, HomeAway is not collecting the taxes. Somebody checks out for $100, let's assume no fees. I collect $100 in my bank account, but I also have a liability. I owe 10% of that $100 for the 10% lodging tax. So once I do that, I did not receive $100 in my bank account, I got $90. So if you think about it, if there was a very intelligent, savvy consumer and they price comparison shopped your Airbnb listing at $100 and your HomeAway at $100, they would be better off buying your HomeAway time and time again because you're not collecting 10% tax. If they check out at Airbnb, it's $110. If they check out at HomeAway, it's $100. You following? Make sense? So now that's the problem. What's the solution? Well, here's what Hardik and I do. We determine which platform collects the tax, which platform does not. We do it in every single location that I have. And then what we basically do is we increase our prices on the platform that does not collect tax by the amount of the tax. So if somebody were to go, using the exact same example before, they would go to my Airbnb and see $100 per night. They would go to my HomeAway and they'd see $110. Now, you might say, but that doesn't seem fair. They're always going to book your Airbnb. Fine, wonderful, that's great. I still get my $100 and the tax of $10 is collected and paid. So I personally, as a host, am indifferent. And that's the thing that I want to share with you in this video, is that if you have one platform that collects taxes and another that does not collect taxes, you should increase your pricing on the platform that does not collect taxes by the amount of the taxes that you need to withhold and ultimately remit to your county, community, lodging tax, whatever it is. And then that way, as a business owner, you are indifferent whether they book on HomeAway or Airbnb or any of the other platforms, as long as you do your pricing strategy correctly. So first thing you need to do is understand the tax. Second thing you need to do is understand which platforms collect and which don't. And then the third thing that you do is simply adjust your pricing on the platform that doesn't collect tax to include the tax there, so that if and when that gets booked, you're indifferent, you're made whole, you get the same net amount as the platform that collects the tax for you. Of course, I would actually prefer them to send the business away from the one where I have to do it all manually to the one that collects it for me. It saves me a step. So if the optics say 110 on HomeAway and 100 on Airbnb, and that savvy consumer is like, oh, great, I'll go use Airbnb, they will quickly learn that it's 110 at checkout, but it saves me a lot of back-end hassle, headache, and trying to figure out how to remit the tax, where to remit it, by when, and so on and so forth. So I always lean towards the platform that collects the taxes for me in each unique location. I'd love that business to be sent over there, because that becomes scalable and automated for me. So let me know what you do about differing taxes in your community. Let me know if one collects and not the other, which does and which doesn't, or if you have to do it all manually. Just share with us all tips and advice on how you collect and remit your local, state, county, lodging, whatever the taxes are called. How do you handle it? Please share with us all. We'd really benefit from it. And as always, go ahead and like the video and subscribe to the channel, friends. Thank you.